Paul, why is oil down so much over the last week, and will it continue to fall?
Well, we always think of Saudi cuts as bearish. It's a bad sign if Saudi's cutting, so they can crank the oil price up. But why are they cutting? We want Saudi at max with strong demand. For Saudi to be cutting into weak demand is fundamentally bearish. So they took a market where speculative interest was low. They drove it to 95. You saw a pretty direct response in the U.S. gasoline consumption, which also fell seasonally. And the gasoline crack just collapsed because you pushed up the crude price and you're seeing weak gasoline markets. And as a result, essentially, you're going to shut down refining, which is going to be bad news for the Saudis. So my view on the cut was that it might work for 6 months, but it might cause you a major problem in mid-2024 when the market's very weak and you have to decide whether you're going to really seriously cut more or you're going to crank up and go for oil market share.
Hey, Paul, can you make money right now investing in oil stocks? How hard is it?
Well, you can on the short side.
Okay, fair enough.
You've had some stocks hitting 52-week lows, which is normally a very bad sign. I think that the market will stay fairly lively just because of distillate tightness globally into winter. You're seeing natural gas acting well, so we like U.S. natural gas plays. We think that's a long term. There's things that we love secularly long term. One actually, funnily enough, is U.S. refining, but another is obviously these Marcellus plays, our EQT, our Range, are great long term stories. And the consolidated remnant, that is the Exxons and the Chevrons, I think will do very, very well over the next decade. So it depends on your timing. If you want to make money now, I'd basically be on the short side. But, we're always looking over time to actually view this sector as fundamentally undervalued by the market because of the importance of oil to the global economy. And I think that'll remain the case for the next 10 years.
If you were thinking about... That was quite the answer. No, I will go away and watch that back and figure out all the little bits and pieces that I need to take away from that. There is definitely some positives in there. Paul, but if you think more broadly about what is happening here, are we setting ourselves up for a fight between the market and the Saudis? How low do we go before the Saudis react again? Is the market prepared to go toe-to-toe with the Saudis here? And if they do, if the traders do, what does that look like?
Well, I think the first thing is the administration, despite their rhetoric about the green agenda, clearly want lower oil prices. Particularly, it becomes a bigger and bigger issue as we hit election year next year. So they're fighting for lower oil prices. What did they do last year? They downloaded 1 million barrels a day of the SPR, basically sold it direct to China, which built inventory, by the way, but whatever. This year, they can't really redo the SPR. It would be, I think, a little bit dangerous at this point. But what they are doing is they're turning a blind eye to Venezuela or actively encouraging a democratic process in Venezuela to be positive. You've got them selling turning a blind eye to Iranian oil coming out, which is really upsetting to the Saudis in terms of market share, obviously. And then, of course, you're turning a blind eye to Russia. So the administration has basically looked away at all the additional incremental supply, and all of that is taking Saudi market share. So I think the Saudis between a rock and a hard place here, and I think they might end up having to go for market share and crash the market. I really do.